Alrighty, welcome back in. I'm Magma. This is Invisible Zones and Double Valid Pullbacks Volume 2. The main purpose of this video is to go over a few things that I kind of left open-ended and maybe unclear to some people in the first video. I will say I was a little bit rushed and scatterbrained when I made that first one, but nonetheless, everything that you learned is still pretty solid in the last video, especially as far as the overarching concept goes, but there are some technical details that I left out. I'm here to set the record straight. And on top of that, I think it would be good for some of you to just get a few more reps in with me, maybe have something that you can constantly come back to and refer to. Let's start with just the invisible zones. If you're making an invisible zone from one point to another, each of these is an anchor. So this is A, this is B. Anchor A or 1 is our responsible/successful high, the high that was successful at running the low that it came from. Price comes all the way down here, it establishes a low for us, and now we can look for a high to occur. We get a high right here. We put in this high point right here, and then we close below the candle. Now, as I said in the video titled The Fundamentals, Highs and Lows, the only way that this high is going to be a successful/responsible high is if it can continue the trend, meaning it can run the low that it came from with closure. As you can see, we don't even get close. So now this is a failure high. Up here is our successful high, and in between them we have our invisible zone. With the invisible zone being above price, we will label it as fear. So obviously if the invisible zone is below price, we're going to be labeling that greed. We'll call it the fear box and the greed box. How about that? Now, as I said in volume 1, the invisible zone claims to run this high but respect this high. That's exactly what it does, and as we look in here on the 1 minute, we can get some confirmation there. We establish one high here. We establish another high here. We can take an entry there with our stop loss manually above this high and target the top of this low. We get a retracement. The retracement fails to close above. Once we get a confirmation of a pullback that occurs before we can close above, that is repeating itself as a double valid pullback. You could even consider a triple if you wanted. Or if you're a more risk adverse person, you can consider this the establishment of the high, and then you can consider this the double valid pullback that you're looking for at the high. Because as I said in the last video, we establish POIs and then we look for a double valid pullback as a confirmation. Side note real quick about double valid pullbacks, you might want to write this down because I was on a one-on-one with one of the students last night and they were asking me if the first valid pullback holds but you have wicks way up here, where is the manual stop loss after you enter on this candle when you close? That's a great question. The stop loss is not manually above this one just because it was the most recent, because if price was to come back up and go right here, to me that becomes invalidated because the entire double valid pullback concept is broken because we've closed above the first pullback. So your stop loss is still going to be manual if you close above this. Now let's say that the wick does not come up here. Let's say that the double valid pullback occurs right here. On the short side, it is the lower of the two. If you're taking your entry right here when you close, it's the lower of the two. Let's say that this had a big old wick right here. Your stop loss is right here, whichever is the lower of the two. And on the long side, it is whichever is the higher of the two. So again, if this had a big old wick through here, then your stop loss is whichever is the higher of the two. If one of the pullbacks becomes invalidated, you are out of the trade. Okay, sorry for getting sidetracked. Let's get back to the invisible zone. If you've been backtesting this or if you're in my group, you know that it's not going to be this easy to find these every time. If you want to find an invisible zone, by the way, you need to first know where they most occur. An invisible zone, the entire point of it is that it catches price trying to counter trend and it sends it back in the direction that it was supposed to be going. For instance, right here, price is attempting to march up. It puts in this high and it puts in a higher low. It's attempting to march up again. again, and now it fails and tries to turn around, and the invisible zone catches it right here and sends price to continue its trend upwards that these higher lows are telling us it's supposed to be having. Or for instance, right here, this high here is attempting to send price down while price is trying to fight to get back up. We're anchoring from this high to our failure right here. So we're anchoring from this successful high to this failure high. Price comes up into it, it rejects, and then it continues to push. This is why I say in the group that they're fear and greed boxes, because whenever we run through greed boxes, we know that greed is winning and we have an agenda to make it up to or through the external highs or down to and through the external lows. Right here, we might be getting another example forming. We've got this higher time frame low that caused price to come up and run these highs here. We've got our higher time frame failure that occurs right here, and we know it's a failure because price comes down, sets a low, and then it fails to take the high. Price begins to try to trend downwards, and after it runs all these lows and gets into this invisible zone, we can see it start to go in the other direction for us, the direction that it originally wanted to go in. I played price out a bit more, and look, don't be surprised when you see this happen. When we come up and we make another failure, we're going to come and return to our invisible zone and fully mitigate it and continue attempting to readjust our trend to the upside. Now that price seems to be failing to utilize this original zone to get us up out of here and continue our trend in the bullish direction, we're going to shift to the most recent failure. We run this failure low while respecting anchor A. I'm certain that you'll see an internal confirmation here, probably multiple. Price makes its best attempt, but it's only able to get 130 points up there out of the 237 that it needed, and it just doesn't do the trick. But we're in here, out, up here. As we are continuing to fail, we can start to look for opposing invisible zones on the fear side. I'm marking out from this successful high, successful because it ran the low that it came from, to this failure high, a failure because it did not run the low that it came from. So here's my mark out. Price comes in, it comes down, doesn't fully mitigate it, and then here it does, and it sends price plummeting down. And when we see this invisible zone get run, so I'm going to anchor from our low down here to our failure low here. As soon as we start to bully this, especially with this weak bounce right here, and then we come and we gobble up that whole wick, look out below. I always tell the people in the group, when you're moving this fast and this strong against an invisible zone, don't just look down to the left, zoom out. Meaning go to your 144. I can't use the 144 because FX Replay doesn't allow it, so 2 hours the best I got for examples, but obviously we're not practicing getting fractality perfect here. We're just practicing the invisible zone. Look here on this time frame, we've got a low that was responsible for getting us up above these highs. We have a failure low that could not get us up above these highs. We come into this area and we bounce. Why did it happen here, but it did not happen here? Like I said just a moment ago, you've got to zoom out and see where the target is going to be. I'm not going to take this 2-hour chart long unless I have a 12-minute confirmation. If you can't see that, you did not watch volume 1 and you did not watch fundamentals, highs and lows, because there's your confirmation right there to take your long and go. Here's a good example of a fear box getting run and then the high getting taken. We've got our responsible, we've got our failure right here. The fear box gets run with force. We get a pullback, and then look, we come and we gobble it up. All of these highs. Why? Greed must be winning if fear is clearly losing. We gave a great strong reaction off of a greed box, and we had no regard for life in the fear box whatsoever. If you're seeing this and you can't tell that price is going to run up at least to visit these highs, then all you need to do is go to FX Replay yourself and get a lot of repetition in. I promise you, you won't regret that time that you spend doing it. Here's a side note I want to cover real quick. I said I had a one-on-one one-on-one with a student last night. I had another one with a different student this evening. You know what? I'm actually just going to show y'all. It's this dude Stafford right here. You guys have to see this. Here we see Stafford join, and let's jump ahead to when he finally posts a P&L. All right, now look at this one. Look at this one here. Here's a testimonial that he gave. I was really grateful that he shared this. So he says he's yet to lose a trade. And this was yesterday, and he posted another one today. This is the final from today. So it's been 3 days in a row that this guy's got 100% win rates. And I was on a one-on-one with him, and I could definitely tell why. I know I said that I'm going to make this video technical, and I am. I'm going to hold to that. But I want you to know a lot of people are getting way too hung up on the technicals of this strategy. And if you're thinking through this purely linearly and technically like a machine, you're not going to have as much success as the people who honestly just eyeball it. When I discovered this in price, it was not from me measuring from the responsible low to the failure low. It was me doing stuff just like measuring from here to here, or maybe here, whichever one I kind of felt like was going to work. Now, obviously, that's not going to go great for you if you just stick in that headspace, right? There was a lot that I needed to work out, a lot of kinks I needed to work out. But what you need to understand about the invisible zone, what you have to get, is that it claims to run these lows and respect this one. As we get more refined, we've identified that it's actually the responsible and the first failure and then the recent failure. Those things are great. They're helping people get 100% win rates all the time. Too many freaking people in this group are getting 100%. Like, they're gonna come and I don't know who, but someone's gonna come and try to shut us down. That is the whole point of the invisible zone. It's that there are lows that need to be taken and there are lows that need to be held, or there are highs that need to be taken and then there are highs that need to be held. If you don't at least at first try to just feel this and just get some reps in, then jumping right into the technicals of it is not going to do you much favors because you don't even understand the whole point of the invisible zone. I bet you that there's people in the group who are hearing this video thinking, wait a second, the invisible zone is just meant to catch reversals when price is going in the opposite direction it's supposed to be, and it's supposed to correct the course or the path of price? Yes, that is the whole point of the invisible zone right there. The entire basis of it. You know how I started with the invisible zone? This is ridiculous, but look, when I saw that price was marching down here, I would, in back testing and on paper, 9 times out of 10 it still worked out, but my stop loss would be down below the successful low, the anchor. My entry would just be at the low hanger that I expected to get run. I would target the high that it came from, and my win rate ended up being pretty good and already much better than what it was before. Getting to the technicals and understanding how deep price typically jabs below these lows or above these highs is where we can take our win rate from being good to nearly perfect consistently. I just want you guys to understand that that is the invisible zone. That is the function of it. That's the purpose of it. That is where it's going to be the most useful, is when it is catching price and it is telling you what price is doing. Look here, we run this high, we anchor here to here. Price jabs up deep, but it gives us a nice reversal. We're on the 12 minutes, so you could probably find something in here on the 1. We get a nice retracement, but then price says, no, we want to continue up. Even though earlier we saw that this one got blown through, if we zoom out and we zoom up and look to the left, we can find somewhere where we might be able to get another retracement. But in the meantime, when we just rip through this and we get a retracement, we can look for a basis to get longs in on because we know that greed is currently overcoming fear in the market. And all we're trying to do is hop on the surfboard and ride the wave. We're not trying to create the wave. We know that there's an invisible zone here. We know that when this gets run through with this much force all the way up to here, that means that we're going to get a visitation externally at the highs. All right, back to the technical side of everything where we get into the nitty gritty of what is the successful and the failure and all that, but I just wanted to clear the air on that, okay? We'll go over just 2 more examples. I'll play FX replay out on the 12 minute, and then after that, we'll get into the double valid pullbacks and we'll be done. And then I'll send you guys on your way to the advanced nuances video. Right now, The market is trending up, if you can't tell. So when the market starts to trend down, we are going to look for the invisible zone to catch it and correct its course. All right, price is trying to go down now. Let's get in here. We establish a low. We fail to take it twice. This low runs the high that it came from. We draw a zone from this successful low. We look at candlestick structure and we find our first failure low. So it looks like we're going to try to establish a high here, and we do. We come down, we set this low. We close above that so we don't count that one. Okay, let's reset. We got a high up here. We close below it. Valid high, we put a low in, we close above it, and then we can't get up here. So this one right here is our failure. So we got our anchor from here to here. As you can see, with the refining, of course, you're going to have some improvements. Price was making an attempt to come down to take the low. It generated a low, and then it came down and it failed twice to take it. It formed a responsible low. It formed a failure low. Price made one last attempt to try to take a jab downwards, but greed overcame the fear. And I say that because look here. Here's a recent failure right here, and I'm anchoring to this successful high and this failure high. And look, I mean, once greed wins, fear just has no shot right here. Now, this isn't always the case. We've got to zoom in and look, but when we see this get run, we're right when we're about right here, and we're moving with force. Zoom out and see what's going on. Right now, we've got nothing stopping us. Until we form structure that tells us otherwise, we had nothing to stop us. We were going to come for this or some more, because greed is winning and fear is losing. Let's get one more example, then we're on to the double valid pullbacks. Let's come down here to our low. Let's mark up to our failure low right here. Why am I calling this a failure low? Because of the way that it is. Now, price is marching up, and it decides it wants to try to turn around. It gets within 3 points of the middle of this big old invisible zone, and it bounces. And from that bounce, we get 81, maybe more. Yeah, look at that. That's plenty. Hey, that's enough that I'd even take that right there. I could post that one on Twitter. You guys starting to see it yet? And look on the other side. Look here at these failures right there. We jab up in, and it gives us a bounce to try to continue down, but then the invisible zone on the other side catches us in our tracks. You're going to have to be able to zoom in and anchor from higher time frame lows to secondary anchors on the lower time frame. That's something that we're going to learn in advanced nuances. But again, we're expecting lows that we would see on the 1 minute to get run, and we're expecting this one here to get respected. We're not betting everything on it getting respected. We're looking for confirmation in here. We're drawing this out and we're looking for confirmation. But we do have a bias because this giant invisible zone gave such an incredible bounce. This fear box was not enough to send price through this internal invisible zone. And now I am expecting visitation. Now, I'm not necessarily expecting it to run to heaven, but I'm expecting visitation. That's what I tell the people in the group all the time. One of the dudes was holding a trade at the end of the day. He got out right here. It came back in, and then it went up for another however many points. And he was like, damn, I should have stayed in. Maybe, maybe not, because all we expect when we run these boxes is to get up here. And then you look in the advanced nuances and the patterns and the shapes and the colors, and you look and see, okay, what's going to happen after that. But this is the basis of the invisible zone. Look right here. You just got to feel it. You know, like, are you feeling it now, Mr. Krabs? Double tap, triple tap. It's just hanging out. Look what we just did right there. Can you see it? Now we're dumping through these lows. Let's zoom out and let's find the invisible zone. We'll call it this one right here. So from our low down here to our low right here, and we're looking for a bounce in this zone. We're looking for price to run these lows and respect this one. Look where we return to. People will look at this and lose their minds, but all this looks like to me is the hum. Y'all will learn about this. Price just generating structure, establishing a low here and deciding that it will not go below it. Don't get caught up on that right now. I shouldn't have even said that in this video. It's going to be in the next one. But yeah, that's the gist. That's the whole thing with the invisible zone. We're running these, we're holding these, we're running these, we're holding these, we're running all of these, we're holding these. We shoot straight through a fear box. We go on a bull run. We shoot straight through a greed box. We go on a bear run. Let's talk double valid pullbacks. I don't have a lot of time. I've got to get on a back testing session here with the group. Here we are in the area of a higher time frame high. Here we are setting the highest point and crossing below it. And here we are setting currently the lowest point. Let's see if we can close above it. We do. Now, For a double valid pullback to occur, we must get a valid pullback, so we must get another high validated before closing above this blue line. And that happens right here. Yes, it's that easy. That is why everyone in my group is getting 100%. Look at that. Your stop loss is up above here. In the area of the high, we reject, we set a high and then a low and then a high. Let me clear this up because everyone coming into the group, this is my fault. If you feel dumb or embarrassed because you're coming into the group and you're asking questions like, well, this was a high and we closed below it and then we had this high and then we closed below it, can't we take that? That's because that's what I said in the last video. I screwed up, okay? You guys did nothing wrong. I appreciate your questions. I'm going to put it to rest right now. To get a double valid pullback, it is a 1, 2, 3 scenario, okay? Let's say we're looking for one to the upside. You need a low, a high, a valid high, and then another valid low without closing below the first one. And on the short side, you need a high, a valid high, a valid low, and you need another valid high without closing above the first one to take the short. In the next video, Advanced Nuances, we're going to talk about what kind of patterns we like to see at certain POIs given narrative, okay? So a standard double valid pullback looks different than a DNB pattern double valid pullback. It also looks different than a hump. Let's look for just a couple more examples here. Let's see if we can find us an invisible zone real quick. Let's grab onto our low down here and drag up to this failure. By the way, that was a pretty nice short, right? We never even came back to the entry. It's that easy. So we found an invisible zone here, marked it out well. We get one pullback. We get down into the zone here. And guys, I know that there's a pullback here and a pullback here and whatnot. Advanced Nuances, you're going to start to learn about where we're at according to the invisible zone and what kind of patterns we're seeing here, like the hump. Pay attention to this candlestick structure real quick for me, okay? We've got an invisible zone and we've got a closure above this, so it makes it a low right here. The next candle actually puts in our high point, but we never close below it. So now we're looking for the next high point right here, and then we do close below it. We're looking for our low point, and then we close above it, making this a low. Let's get rid of these irrelevant ones in the middle. And look, now we've got 1, 2, 3. Low, high, low. When that closes, this is where the rules call for the entry. If your risk tolerance doesn't allow this, if you would rather see price close above and then maybe come back for you, sometimes you'll miss out on trades, but you will end up having to sit in less drawdown. It won't increase your win rate because if price comes back for you and it stops us out, it's going to stop you out too anyways. These internal highs, we can take the bottom of this high right here. We can get ambitious and we can take the whole thing. This confirmation isn't just some random narrative occurring out of nowhere. You're like, well, you're not at a higher time frame POI. This is narrative right here. Dumped this invisible zone. And before that, not to mention, you could have known earlier that this was going to happen when we dumped this invisible zone right here. It just tells you what's going to happen. We look for the retracement. We look for a failure, a confirmation of a double valid pullback on a higher time frame, especially when you're looking for big moves like this after you dump a big zone or two. And boom, we're headed all the way down here. Let's zoom out one more time and let's see where we're headed. Wow, what a shocker. We were headed to this higher time frame invisible zone between these lows here and this low here. Okay, one more double valid pullback example. I feel like I haven't touched on that enough. Right here, we have one pullback. Why? Because we have a high, a valid high established. Price comes up, it pulls back, it closes below the high point. Now we have a low point and price closes above the candle that made the low point, making it a low. So now we have a high, we have a low, and right there, we have a double valid pullback. Now, I'm not sure if we're in a higher time frame POI, so I'm not saying just take this, but if you are in a higher time frame POI and you're looking for a reversal, this is it. I mean, not much good stuff going on here. Like I said, I don't know if we're in a higher time frame POI, probably not given what's going on here, but just pay attention to these candles right here. We put in a high. It's a valid high when we cross below it, so this is pullback 1. We put in a low. This second thing we're looking for is a valid low, and we put in pullback 2 when we actually validate this high point right here by closing under the candle that makes it. That's how you find a double valid pullback right here. And let's look for one to the downside real quick just so you guys can see it. Oh wow, just generated it out of thin air. Thank you, market. We have 1 high point, close below it. 2 low point after the validation of the high. 3. Again, I also want you to pay attention to the fact that because we're not in a higher time frame POI, this is meaningless. A double valid pullback. I saw some guy message one of the Discord members that he follows on Twitter, and he saw the double valid pullback, and he was just like taking it from wherever. He saw a double valid pullback, and he was like, "Boom, that's me. I'm getting in long." You've got to have these occur in the higher time frame POIs as well. Otherwise, you just get screwed. I mean, look at this. This is calling for longs right here, and obviously it gets dumped through. Final thing I'm going to say, because I get a lot of questions about it, can you get a double valid pullback where, let's say you've got a low established with 1 candle, you cross above it and establish a high, and you cross below that high on the same candle? Can the same candle validate the low, meaning close above it? Here, let me draw it right here. Can the same candle validate the low and get validated itself and make a high? Yes. Now, that's going to be in mastery when we talk about the grading scale. That makes it less attractive to me. But we have a low here because we close above it. We have a high here because we close below it. Put in a low point, we close above it. We make a high with the same candle. We make a high because we close below it. Yes, that can happen. Feel free to join my Discord. All of my students are kicking ass. They're starting to do better than me. Not even kidding. I get nerves during the stream and I'm trying to talk in front of a bunch of people, and I got these dudes just ripping the market up, and I couldn't be more proud. It makes me so excited. I really hope if you're watching this, you come join. Your questions are welcome. You'll get next level accountability. You'll get next level encouragement. You'll get a next level of friendliness in the environment, and you'll be safe from having to be bombarded with new strategies, different concepts over and over and over again. You can just focus on mastering one thing. And again, that is the 112 and 144 minute on the NASDAQ or the NQ, using higher time frame highs, lows, invisible zones, and internal narrative for your POIs, and double valid pullbacks, and DNBs for your confirmation, and that's it. You will get the goosebumps when you come in there and you start realizing that you're taking the same trades that everyone else is, because we all know this to be true. Every morning I wake up to a handful of the students sending their live charts, and they're all the same thing, and they're not talking. They're not in the back testing or the live trading channel chatting about it. They're just taking the same stuff on their own. Speaking of the back testing channel, I'm on in 4, so I'm going to let you go here. I'll see you in the next video. Advanced Nuances.